Joining us today is Nicola from Lloyds Bank. She'll be giving us an insight into all the challenges and opportunities developers are facing this year. So, Nicola, there are still a number of challenges for developers this year. Could you share what these challenges are and how Lloyds Bank is combating these?
So we work closely with a number of developers, so building houses, new housing, and fundamentally across the UK at the moment there is a shortage of housing. And there's a number of reasons why probably the challenges that developers are facing at the moment in the building of new homes. There's a part of the planning and regulation that they need to get beforehand, which can take an element of time. In addition to that, over the last sort of 12 to 18 months, they've seen increases in costs of materials with the inflationary backdrop that they're working against. And also cost of borrowing has increased, so when developers set out on their initial plans there's been quite a bit of change in the macroeconomic environment as well that they faced into, and then labour is a constant challenge we hear from the sector as well. There's a lot going on in the background, but equally we see a number of great developers build new homes, which is really needed for the sector, and also conversion of existing buildings as well, which is providing more homes to the UK. There's a part where we work very closely with a number of our clients and our prospects to help on that journey of developing new homes, particularly around some of the sustainability parts at the moment. We know that both there's the sustainability part from the wider side of needing more sustainable homes, but equally the cost of once those homes are then built, there's reduced emissions from those and an ongoing cheaper cost. So we have our Clean Green Financing Initiative, which is all around providing arrangement fee-free financing for more sustainable homes that are being built. Then we have a sort of a wider sustainable finance framework, which then is also sort of our parameters that we operate within. And equally we work closely with other players in the sector to provide frameworks and benchmarks of what good quality housing looks like as well. So work closely with Next Generation and JLL on that, and so really helps developers sort of focus on what they can do to make the best of building more homes within the UK.
And what does biodiversity net gain mean for developers?
We talked around sort of the increasing sustainability regulation that's coming through as well, to make sure that the homes that are being built are more sustainable. There's equally parts around biodiversity net gain, which is looking at nutrient neutrality effectively to make sure that any developer is not putting more pollution into the waters in particular around there. So it's another challenge that developers are facing into. It's something we're very aware of in the market and the regulations that are around that at the moment.
And on to my next question. Borrowing rates have reduced slightly, and the Halifax House Price Index, published in December 2023, states that house prices are 1.7% higher than they were in December 2022. What does this mean for the sector?
We've touched on some of what the challenges the developers are facing within the build part. The other part that they've been facing into is then actually sort of changing house prices. So what we've seen with some of our developers, that they're holding the stock to then rent it out, because actually we're seeing rents increase across the sector at the moment, particularly the residential part. But equally then when they come to sell, we have now started to see from the Halifax Price Index that increase in house prices coming back, as at December 23 it was just over 1.7% higher than in the prior 12 months. And also borrowing costs feels like they've now flattened or are starting to come down compared to what we were facing into a rising rate environment. So there's definitely a more optimism, I would say, within the sector now. And then also from a financing perspective, we've got increased flexibility to be able to support developers that do want to hold that stock. So if they want to then be able to rent it out, then they can move from what is a development product, which is sort of to support them through that development phase, so slightly shorter term, onto a longer term or cheaper investment product.
And summarising all of this, how does Lloyds Bank fit into this and help the sector?
Lloyds is very embedded in the sector and will continue to be, and will continue to want to try to provide through the cycle funding for our clients as well.